Glad to be back at Tech Talk. I am MVJ, the COO of Meta Exchange AI Inc., a company listed in the Nasdaq Private Market. And we have with us today Dr. Ahmad Moradi, CEO of Maxwell Rand Inc., headquartered in the United States. For the past 28 years, Maxwell Rand has been deeply engaged in European investment banking, Swiss wealth management, and structured pathways to Nasdaq pre-IPO and IPO listings. Maxwell Rand's core mission is to create value through the deployment of advanced AI-powered video streaming technologies ecosystem. This is a two-part session, and our topic for today is unlocking capital and compliance, how Nasdaq Private Market is reshaping private company growth, and the second part is a two-step Nasdaq IPO process. Now, in an era where private companies are staying private longer, extending from an average of 5,000 years in the year 2000 to nearly 15 years today, the need for innovative liquidity and compliance solutions has never been greater. Nasdaq Private Market, established in 2013, is revolutionizing the private market landscape by providing a sophisticated platform that facilitates capital access, shareholder liquidity, and regulatory compliance for pre-IPO companies, employees, and investors. With over 60 billion in transactional volume across 775 plus programs, NPM is reshaping how private companies grow and thrive in a dynamic financial world. And now I hand over to our guest, Dr. Ahmad Moradi. Over to you, Dr. Moradi.
Greetings, everyone. Thank you, Mr. VJ. Thank you for the team at Tek Talk who are sponsoring with K Media. This service is for the purpose of education, information, and giving you insight ideas as how we look at the new market, the industry that we are working in the last 28 years, and how it is transforming to the new era. Sorry about the confusion and the technical issues, but more importantly,
Oh, we
the
have been busted
subject that the subject that we are talking about is about wealth management and about how small companies that they are planning to grow in this new emerging market can create value for themselves and at the same time create for their valued shareholders, their employees, their stockholders, and stakeholders at large. Now, let me explain what stakeholder means. After I studied and became certified as a part of ESG by AICPA, one of the things that we learned, stakeholders term defines the people that you work with, including your suppliers, your value chain, the impact of all of the cause and effect that they create to create the environmental, social sustainability, and governance, along with the growth strategy that the management puts together. So more importantly, the first thing that we always try to do is understand the needs of the clients. So one of the things that I did personally was the fact that with the collaboration of Mr. VJ and partnership with K Media and Borneo Post, we took a journey. We took this journey back in 2023 where cookies were deprecated. And we were looking at the market and the advertising, and we were looking at how it impacts the online print publishers and how these kind of issues are transforming. And along the way, it came technologies that I have been personally involved since 1986 called artificial intelligence. And I had studied in those areas. And then with the introduction of ChatGPT through a browser, then you saw that new generation of AI agents, new derivatives of technology from robotics to different uses of AI now is becoming the most important part of the fourth industrial revolution. But there are consequences, and some of these consequences are about employees. People are losing jobs. Example of that is we in United States are having major corporations such as Microsoft, Google, Amazon, and so forth, replacing their employees with AI. So therefore, on a daily basis, we see right in here that tens of thousands of qualified engineers, service engineers, programmers, people like that, even barbers and services that we take for granted on a day-to-day basis are getting automated through the AI. But remember, there is nothing new because from the 70s, when we started automating with the robotics, the auto industry, and using the robotics in the 5G, creating weapons and distribution of those, these issues now have transformed itself to a forward-looking statement. Where are we and where are we going? So running a 28-year-old company called Maxwell Rand as wealth management, as mergers and acquisitions, as an individual that I have personally been involved in 22 publicly traded companies and working both in Europe and United States, I look at the strategies at this age from the fact that we have to create and train the next generation of our entrepreneurs with new opportunities and new way of thinking. There are two schools of thought, but in the old days that I went to school, I had a professor, blessed his soul, that he sat there in my class and he told me, Moradi, there are two ways to get rich. One is the stock market and the other one is real estate, and you got to know what you're doing. And somewhere along the line, there came digital economy. And now you got digital assets. And if you remember, for many years, the bankers do not like digital assets. They only wanted your property, your real estate, something tangible, equipment to be able to give you either debt or equity financing for your company's growth. So we looked at all of these variables in here, and we did a series of study through a technology that we call Max AI. So I'll share some slides with you and share some of those inputs that you can take a look at it and then get some general idea of what we are talking about, and hopefully that sheds some lights. So having said that, Maxwell Rand, it was a organization that has been established since 1996. We work only with the different layers of organizations. These are financial intermediaries. Like, for example, when we worked with Merrill Lynch, JP Morgan, Goldman Sachs, Raymond James, kind of names like that, you're all familiar. Those are the top tier. But then we work with the boutique firms for the smaller issuances and so forth. So one of the areas that we looked at, Mr. Pipe, it was private investment in public entities. We looked at the investors that they come in into different phases of opportunities, if you will. They like your project, they want to be a part of that, but also they want to mitigate their risk. Risk management is always important because investors are savvy these days and they have many options to choose from. So therefore, in this, what I would call ocean of opportunities that is available to them, where do they want to create their own wealth? Wealth is not something with what we call pump and dump. That doesn't work because at the end of the day, you don't build longevity. Longevity is when families like BMW, Walmart family, Walton families, or Armani families and all of these guys, they create portfolios from their work, from their assets. Their portfolio becomes longevity that it carries them through generation of structure, planning, wealth management, and that's why you don't find any people that they are highly wealthy other than the ones like Elon Musk that likes to create publicity, but the old money, the aristocrat money, the wealth management money in Switzerland, in countries that I have visited and I worked for many years, has given the opportunity that you keep your wealth in your wallet. So with that kind of a situation, there were two opportunities that it got created. And Mr. Vijay, why don't you tell us a little bit about the Nasdaq side of this story, if you don't mind? Unmute yourself, please.
Well, the Nasdaq Private Market provides, it's the second market platform that connects private companies with a robust network of institutional investors, including global financial leaders like Bank of America, Goldman Sachs, and UBS. This network enables companies to raise secondary capital efficiently. Now, by bypassing traditional barriers to funding, by streamlining capital introductions, tender offers, and block trades, NPM empowers companies to secure growth capital while maintaining control over transactions. In 2023 alone, NPM facilitated 3.3 billion in transactional volume,
Mhm.
demonstrating its pivotal role in unlocking capital for private enterprises. Now, this is something very interesting, Dr. Moradi, because now you have got the public market and you have got the private market, which I believe that generally most of the market in Asia is not privy to. And this is a market also now. I've spoken a little bit about transforming capital access. Now let's look at how they enhance liquidity for stakeholders. Now,
Right.
NPM addresses the growing demand for liquidity among private company employees and early investors who often face long lockup periods before an IPO traditionally. Now, through structured liquidity programs such as company sponsored secondaries and auctions, NPM has enabled 200,000 plus shareholders to monetize equity, funding live events like home purchases or education. The platform's controlled company approved transactions ensure fairness and transparency, delivering median participation rates of 75% in 2023, a multi year high. This liquidity fosters employee retention and investor confidence, driving company stability and growth. Now, this is interesting, Dr. Moradi, because now you have got a market where it enhances the liquidity for stakeholders versus the public market, and it's
Right.
privately done, right? And then another interesting part about the NPM is that it's the pioneering compliancy and its transparency, navigating complex regulatory landscape of private markets is a significant challenge. Now,
Right.
the NPM's Tape D data suite launched in 2024 provides real-time pricing, bid and offer history, and valuation insights, enhancing transparency for investors and companies alike. By leveraging AI to digitize corporate data, NPM ensures compliance with evolving regulations across jurisdictions, reducing risks and building trust. This commitment to regulatory excellence positions NPM as a trusted partner for private companies scaling globally. Now, what is this strategically impact and the future vision of NPM? Since its spin-off from Nasdaq in 2021, NPM has grown as an independent entity backed by strategic investments from major financial institutions. Its 62.4 million Series B financing in 2024 underscores its potential to expand data analytics and global reach. As private markets are projected to grow to 7 to 9 trillion dollars, NPM's infrastructure is poised to redefine capital markets, making private investments as accessible and liquid as public ones. This shift not only fuels innovation but also democratizes wealth creation for employees and investors. Now, the conclusion is that Nasdaq Private Market is a game changer in the private company ecosystem, unlocking capital, enabling liquidity, and ensuring compliance with unmatched expertise. By bridging the gap between private and public markets, NPM empowers companies to grow, employees to thrive, and investors to seize opportunities in a $3.5 trillion asset class. As private markets become the new frontier of wealth generation, NPM stands at the forefront, driving a transparent, efficient, and equitable future of global capital markets. Now, that's interesting, isn't it, Dr. Moradi? Over to you.
Thank you. The most important thing that Mr. Vijay just explained is there was a market called private, and everybody wants to go public. That's how they get rich, right? And if you look at companies that they are listed, for example, you will find companies like Discord, uh, you know, uh, Epic, OpenAI, all of these companies, they are in Nasdaq Private Market. These are all unicorns. There are about 120 unicorns that they are residing at Nasdaq Private Market. Although they qualify to become an IPO registered company, but they are taking their time. For what reason? Let's talk about that for a second. In the open market, you are volatile. Stock go up, goes down, and the company that is building its organization and is building its portfolio and its growth strategy has challenges. And these challenges, through the outside resources that they call them shoulders or naked shoulders and so forth, they can bring the value of your stocks low. And then you have no value to trade because your stocks are your soft money. You trade that, and that's how you margin it. You sell your shares, you create equity, you buy your property as a project or an entrepreneur. But more importantly, your employees are very valuable assets, including your investors. For example, when you have an employee who started with you at the age of 20, like Mr. Vijay just said, average according to PwC is about 14 to 15 years of IPO from 5 years. Now that guy has to become practically 34 years old to stay with you, to use his stock option to benefit his family. Okay? So 14 years of wait and period is not something that small companies can attract, or larger companies attracting them with their stock options, with their incentives. Next is your investors. Investors come in different layer cake. They come at the early risk, at the founders, at the family friends, at safe level, at registration of a series that you have, and then you raise based on your management by objective MBO. Those, but different investors as they arrive to invest in your company, what happens is basically they have different layers of risk. The earliest risk takers are your family and friends, right? They are the ones that they're coming. So you need to reward them. So that is why we look at that as an opportunity. And more importantly, the companies that they come in here, they have to meet compliance. Why? Because once you become a NASDAQ listed private market company, then you have all the compliance, the regulations, the requirements that you can serve your constituents, meaning your stakeholders, the ones that you have given stock options, the one that you bought services in exchange for your stocks, the ones that they invested time with you, like your employees, that they made you who you are. So rewarding everybody has to have a platform that it doesn't hurt you and the company, because under NASDAQ compliance, you can match a transaction, okay? And this transaction has a buy and a sell. So all of your employees, your investors have the rights to sell and auction their own shares. Now, what happens on the other side? There are a series of services that NASDAQ has created, either directly or indirectly, for smaller companies that they qualify. And one of the areas is that they are looking at the fact that they don't want to deal with the threat actors, scammers, because when you're building wealth, you're building that on longevity. You don't want somebody to come and pump and dump, like you see a lot of what we call rug pull on Bitcoin or cryptocurrency. You put money there, you see numbers going up, 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 and then suddenly the numbers disappear. This kind of things creates chaos, confusion, frustration for the hardworking people, including yourself, that you have worked in this industry for many years, you challenging yourself with the status quo, the new technologies and new services that you're providing. So as a result of that, this ability of giving the private companies a infrastructure that when you are ready to file an IPO with the registered revision under SEC and getting your no quiet or no comment under quiet period, 3 months later you can become an IPO company. That's how it is structured. So what Nasdaq looked at it was from regulation CF and crowdfunding in the back in 2013 days until now. They built this multi-billion-dollar infrastructure where they select the companies that they qualify. Okay, so not everybody can get in there. They have to meet certain registrations, certain qualifications, but that gives you a very steady standards and a trust factor and a risk factor with one important issue. When you become a Nasdaq private market listed company, institutional investors and accredited investors are the ones that they are interested in working and investing with you. So you're not dealing with the non or unsophisticated investors. They have to prove to Nasdaq Private Market that they have more than 5 million net worth. They have to go through KYC, AML, and all of these factors. Otherwise, they will not be able to buy or sell or trade. And this sometimes takes months, but it is worth the time and investment because you're building a structure of trust, mitigating what is called J factor. What is a J factor? J factor, if you look at the J from the left side moving up instead of the other way around, you start a business and your business start draining money. Okay, we call them Death Valley in investment banking. You have to keep paying every month, okay, till you get to what is called break even. And that becomes your J. And from there, you're profitable. So what big investors do, and investment community, LPs, VCs, and so forth, they rather to buy the stocks of these companies because they know they are only growing. They have mitigated their risk through the J factor. They are marginally profitable and they are expanding. And that is why companies like Stripe, that is got a valuation of a $94 billion that we are meeting with them next week on another project, is the fact that over 30 days they were able to raise $14 billion through Nasdaq Private Market. X raised $9 billion. Okay. So therefore, the liquidity through the accredited investors are there, and more importantly, the companies that they need, because exchanges are excluded from the law of solicitation. They cannot solicit your company or product, but they can create a ticker. So the sidebar that you see in the bottom of the page that is called ticker, that is a tape that you license, and that license gives you the ability to proceed accordingly. But more importantly, when you come into the pre-IPO companies, and I'm sharing some of this screen because we got Maxwell Rand approved through its pipe that we can buy pre-IPO shares. These are pre-IPOs, by the way, and then qualify itself for the IPO registration. So when you come in here and you look at this kind of things, you will discover that you start from signing in to the fact that you come to the trading platform. Your employees, they can sell their stocks. Your investors can sell their stocks, so there is no restriction on it. So that gives them liquidity. And that is why certain investment bankers around the globe, now they're going to secondary market as part of their portfolio, including KKR, that partner with Capital Group, including institutions that we have seen, such as Fidelity, to open up their own platform for this kind of things. And then you make your offer, and then you auction it. For the companies that they want to raise money or do acquisitions on M&A and options, then you have that service available. And then with the direct listing that you can do primary these days as well as secondary. This is extremely becoming valuable, that you're only reaching out high net worth investors. So Nasdaq went ahead and acquired another company that it allows you to do virtual roadshow. So when you want to ready and broadcast yourself and attract new investors, now you don't have to worry about who is investing. I give you one example just recently happened at SEC. A company got listed, algorithm called AI follows the money, and all of a sudden $250 million of investment came from a Russian oligarch, and they closed and suspended the trade. All the shareholders are held, obviously not happy with the situation, but there is nothing they can do. So what you don't want to bring is threat money, that it destroys your organization if you're building a ESG model that it creates the sustainability. And then more importantly, you can see the transfer and settlement is done through Nasdaq. Why? Because of the fact that when they are wiring the funds goes to Nasdaq escrow, shares that you have that you're doing gets transferred. Nasdaq ensures these transactions are done properly. And once it is completed, then the funds are released less Nasdaq transfer fee and transaction fee, which normally runs about 1% of those. Also in here, by the regulation, the investors that are participating, they cannot come in for less than $25,000. So therefore, there are regulations, but within this principle of educating you, then you can see that Nasdaq generated, as Mr. Vijay explained to you, and then once you go through the KYC and AML, you get to your trading terminal. And this is where, as an investor, as trade, somebody like Maxwell Rand, we buy different companies' shares. So we have portfolios, we look at their activities, we look at their performance, and we know what to do in here. And then obviously, like Mr. Vijay again said, from October 2015, Nasdaq took full ownership of Nasdaq Private Market, okay, in that site. And then they changed it, but now they have vested interest. So it's a syndication of many people, including Bank of America, Merrill Lynch, BlackRock, Allen and Company, etc. What we have done as an organization to help organizations that they do not meet Nasdaq Private Market requirement to become subsidiary of our Meta Exchange AI, give the liquidity to the stockholders and stakeholders and the employees and the management and the owners. And then once we have gone through this kind of journey that they have signed up and so forth, then we can go into basically buying or selling your shares. And this is technically, that's how it works, that you disclose yourself, you go through these exercises, because we took Meta Exchange AI in collaboration with the relationship that we had and the disclosures that we had made in the region of Malaysia as a market where we did acquisitions, partnership, and so forth. And we brought those entrepreneurs into the secondary market. And then by giving them the granting, the viewing the market, posting a bid, negotiating trade, and transferring funds, now you have the way of doing things. Example of that is Nasdaq Private Market adds Bank of America to consortium of investors. So who do you want people to buy your shares? Do you want the little guys to buy your shares, or do you want institutions to buy your shares? These are the questions that you have to answer to yourself and to your constituent. We believe institutional investors are the long-term strategy, because they look at your growth, they support you, they handle your volume. And since I've been officers of public company, I'd rather to have high net worth and institutional investors in my portfolio, what I call Wall Street versus Main Street. However, Maxwell Rand decided to support the Main Street by creating the capabilities that, for example, if you don't fit to this profile into Nasdaq Private Market, such as VC, private equity, LP, family offices, etc., we put your funds into our pipe, And that is one of the reasons that we created this pipe, that we can do this kind of regulations under SEC. So when you come in, and what is PIPE? It stands for Private Investment in Public Equity. So you are buying either pre-IPO or IPO shares. So therefore you have liquidity. With that liquidity, then we teach you on the wealth management. So our company as a whole, working with Nasdaq, we qualified our Max AI to do PIPE, IPO, and M&A, which we are currently active. And then we help the companies through either on their own or as a subsidiary to get into these two-step Nasdaq listings. And then collectively, we take the company public and we create liquidity for all the shareholders, stakeholders, and the company as a whole. With that in mind, I have no further comment for this part. And if you have any questions, I'll be more than happy to answer.
Dr. Moradi, I have got a question, okay, for the
Yes.
benefit of our audience. Now, how does the Nasdaq private market ensure equitable access to liquidity for both employees and institutional investors in private companies?
Well, good question, actually. Nasdaq Private Market ensures equitable access to liquidity through what is known as second market. Second market, that means that you already have stockholders. They are looking for liquidity, okay? And you still don't want to go public yet. So you're at the pre-IPO stage, which facilitates structured company approved liquidity program. But there is one good thing about it, is that company and Nasdaq approve a transaction. So nobody can go behind you and say, if you're selling your shares at $10, Mr. BJ, and one of your employees decides to sell the share for $1, that will not happen without the consent of you and Nasdaq. So you do not undervalue the company because you depend on your valuation, right? Your valuation is the one that people are betting on to invest with you. So for employees that the second market employee work provides, it's a service that around 775 companies have used, especially mostly in Silicon Valley. And they have been able to give their employees a way to liquidate their stocks without violating SEC laws. Because when you're a public company, you have what is called insiders and outsiders. When you are an employee, you're an insider. When you are in a public company, right, inside information can take you to jail. So therefore, you don't want to trade because other people have become victims, like Martha Stewart, for example, her own IPO. She sold some shares, she went to jail. Very straightforward. So avoiding those kind of legal pitfalls is what Maxwell Rand does for our clients, for our projects. But normally, as you have witnessed yourself from 2023, where we started with the Meta Exchange AI as a special purpose vehicle, we look at the needs and the requirements and the project. And then we engineer it in a way, just like any other engineering platform, that we can meet the requirements. So we always walk from the front door. And the employees subsequently, they can benefit from them at the time that you, as an organization, feel that your employees can sell or liquidate their shares. Sometimes, like we have right now with our project that we are doing together in Silicon Valley, as you know, we have a vested period, right? So you say, hey, if you stay with me for 2 years, if you stay with me for 3 years or 5 years, I'm gonna let you sell your shares, right? So this way they have incentive to have a vested time, vested intellectual contribution to whatever they're doing for you. And at the same time, you're giving them and their family an exit strategy. I hope I answered your question.
Yeah, thank you. Thank you, Dr. Moradi. I have another one. Okay. Now, how is NPM adapting to the evolving regulatory landscape across global markets to support private companies expanding internationally?
Excellent question again, because one of the things is that when you look at local versus global, this was a journey that NASDAQ itself took because they looked at the market as a whole that the private market is chaotic. Okay, Nasdaq being a brand since 1971 and regulated by SEC and the compliance and through its association of broker dealers, everything is under the books, completely full transparent, right? So this transparency and non-transparency created a vacuum. And this vacuum, basically, NASDAQ decided to take advantage of this, including for the unicorns that you have witnessed yourself on the platform, and give them a way that they can accomplish what they are accomplishing without really worrying about it in a global basis. So NASDAQ went into adopting a global regulatory demand as opposed to just SEC demand. And they started looking at the high integrity of the settlement and making sure, after spending billions of dollars with the KYC, the AML, the bankers, and so forth, under the security laws of multiple jurisdictions, that their patent pending transfer and settlement technology that they apply on a global basis gives them an edge. So therefore, they started working with the global players such as BNP, such as UBS, such as Jojo, and in 24, and enabled NPM to expand its footprint, particularly in Asia Pacific market, ensuring that private companies can navigate international regulation while accessing capital and liquidity. Back to you.
Thank you very much, Dr. Moradi. It has been very interesting because we ourselves, being a Nasdaq private listed company, we see the advantages, in going forward, the advantages to our shareholders, to our investors, and also to our employees. So it's been a very interesting journey with NPM, and I believe that the APEC market will benefit from this broadcast. And I don't have any more questions because this is a two-part show, and I don't want to bore the audience. We will save some of the subject matter and questions for next week. And I would like to actually thank our sponsors, Mr. Patrick of K Media, Borneo Post, Utusan Borneo, TFM, and also Oriental Daily. And I also would like to thank all our team behind the scene. We have not been back here for about, I believe it's more than a year. And now we are back, the vengeance. Everything is going like a Swiss clock. So I would like to thank everybody again, and especially Dr. Moradi for taking up the time and being up early because you are in the Eastern time in the States. Thank you so much. And I would believe we'll see everybody again next week. And stay tuned. We've got a very interesting subject matters coming after next week, which is actually the future of TV, which is a very interesting subject where we're going to talk about the future of TV and how it's going to be deployed. And we are bringing the management and the founders to have a few words here. So stay tuned, everyone. Thank you. See you all next week. Is there anything else you want to add on to this, Dr. Moradi?
We have some programs that is coming out in Beijing with Asia Pacific
Yes.
Broadcast Union. We will be presenting series of new technologies sponsored by Maxwell Grant and Meta Exchange and our consortium of family of companies. We will be sharing some of those input and ideas with you. The general consensus that we have within this organization is collaboration, communication, and being transparent. So therefore, we can build organizations with the vision that they create longevity and also helping the generation that they're losing their jobs to the AI with a new way that they can retrain themselves and become part of the new society. So with that in mind, we want to thank you for being our audience, and thank you for Borneo Post to support us over the past 2 years with their publicity, announcement, promotions, and more importantly now, taking that into a height where we can bring those publishers and this technology and feature you and your company. So please feel free to reach out to our team. If you also have any questions, please feel free to send us to, a text message that they can send you via email or via messaging, but you can definitely contact us at mvj at mxctech.com. mxcg.ai. Again, I repeat that, mvj@mxcg.ai, that you can ask those questions or schedule, and we would love to have you as a part of this collaboration. Thank you again. Enjoy your day.
Thank you.